Hello traders and welcome to another video review. Today is Tuesday, November 23rd, 2021. Let's take a look at the Forex calendar. It looks like we are going to be quite busy today. PMI manufacturing, composite and services data are scheduled for release from across the Eurozone. Two main countries that are involved in this procedure are France and Germany. As you can see, from France, PMI manufacturing has beat the expectations, services has beat the expectations, composite PMI has beat the expectations. The same situation is in the Germany. Manufacturing data beat the expectations, services beat the expectations, and the composite PMI beat the expectations. All of the current readings are on the InstaForex webpage. We are waiting for PMI manufacturing, services and composite PMI from the Eurozone as a whole. Those data are scheduled for release at 11 a.m. and then of course PMI manufacturing and services and composite data from the UK as well. And that will be the end of the data from the Eurozone during the London session. And during the New York session, we got data from the, of course, the US. ISM manufacturing data are scheduled for release at 4:45. Market participants expect an increase from 58.4 to 59.3, a nice increase in the ISM manufacturing. The same situation is with the final services PMI and the composite PMI. Then at 5 o'clock we got the Richmond Fed manufacturing index, and then of course we got some speeches from Bank of England deputy governor for financial stability, John Canifi, as you can see at 5 o'clock, and then we got the leading index conference board data from Australia. So that's a pretty busy day today on the financial markets, especially in form of the PMI services and composite data. So let's take a look at the euro dollar first. Daily time frame chart of the euro dollar looks very bearish. We just broke below 61% of the Fibonacci retracement of the whole post-COVID move up. This is it. This is that level here. This is the COVID sell-off. This is the post-COVID rally. So right now we retrace over 61%, and seriously we can basically remove those levels as they are violated. We are trading below them. And right now, it looks like none of this Fibonacci retracement levels has been strong enough to keep the market from falling. So where is the next target for the bears? The next target for bears is located a little bit lower. So let me just take, I think, one of these lines, and we will move it somewhere here. This is kind of a important technical support. This technical support was established after this highs here and that consolidation here. So we got that level here between 1.1167, 1.1153. So those are the next important technical support for the euro dollar. As you can see, we are now trading a little bit out of this channel. I guess the channel is sloping like here, so we broke below the channel. Maybe there will be a test of the lower channel line, and then the market should reverse and return to the level of 1.1167, 1.1153. Market conditions are extremely oversold. However, the market is trending. The market is trending down, so we can stay in this extremely oversold condition for quite some time before some meaningful bounce will be present. Those supports are just temporary supports for today, 1.1227, and yeah, that's about it. I think I cannot put much more stress on the resistance levels here that you can see on the chart. So outlook is bearish for the euro to the dollar. Of course, we got some data from Canada today, maybe not that important, but it's worth to take a look here at the current market developments for the Canadian dollar. As you can see, those two moves up are now violated. I mean, they are not equal, because we just broke below 3.25%. So that was the length of the wave B. We don't need it anymore. This is not a part of the down move. This is something completely new. This looks like more like a up move that has started after this ABC corrective decline, as you can see, towards one of this Fibonacci projection levels. So ABC is completed. Now the market is going up towards 1.2806, 1.2928, which is the next target for bulls, and the level of 1.2655, 1.2647 is currently the technical support for markets. Let's now take a look at the crude oil market. Daily time frame chart of the crude oil is showing us a reversal. Why? Because we used to have this kind of a triangle pattern here. It didn't work. The market broke to the downside. Now the decline is over 12%. So this is the bigger decline during the up move. So this is a correction to the downside. As you can see, momentum broken below the level of 50. We are into the negative market condition. The bears are in control of the market, so we can now remove all of this previous measurements of the corrective declines, because we are finally made the overbalance. These levels now will be the technical resistance for price: 79.45, 78.04, and 77 dollars. The support, as you can see, is being tested at the level of 75.16. The next support is 74.37 and 73.15. Then there is a gap, and the next target is at 70.59. However, we can see clearly that this decline is in three waves. Let me just label this three waves for you. This is that situation. We have the decline in the level A, B, and the level C. The question is whether this decline has been terminated yet, or maybe the decline on the crude oil will evolve into more complex and time-consuming decline. Here, 12% has been done to the downside. However, there is no indication of a strong move to the upside, because we need to break below the lows of the wave A. So maybe we will just lift our technical resistance a little bit towards the lows of the wave A. There you go. This is here at 478.27, so that's the newest resistance. If we close the daily candle above 78.27, then we have the first confirmation the ABC correction is completed, and the market should go a little bit higher. The longer term trend is still up, and we should expect higher prices of crude oil in the future. This scenario is invalidated only if that low here at 62.34 is clearly violated. And last but not least, let's take a look at Bitcoin. What is Bitcoin doing? Just as expected, the Bitcoin is continuing the decline in the wave 4. The wave C is being now almost completed. We should expect a bounce anytime soon above 59,528 towards 62,517. So that's my outlook for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.